Okay, so let's go to technical analysis. That's how it looks like. I had the previous highs just to show you that it's went actually more than $200. Okay, that's how. Let's look at monthly first. This is from 2008. We can see it's kind of a growth stage, and even probably if we look at something like that parallel channel going down, trying to end the second wave, right? Not exactly like that, but this is the case. So if we go for daily chart, so we can see that the maximum was in 2019, right? So that was their maximum, $2,005. It's actually very, very similar, right? So very close to Nasdaq, especially the last few waves. I'm just wondering if you can add. So, but we can see that Nasdaq was going down, and what's the drop from the last? So nearly 40% drop, okay, during the last year, and we expect about 10% drop in net profit during this year. So the drop in price 40%, so halved, right? But profitability only 10%, and mostly it's related to the fact that the whole market is going down. Okay, so this is the case. Now that's what we see. It was like after the COVID, it bounced back, and the level is around 133, 36. That was a very strong support for them. Then we broke it through on one day, right? So from here to here, and then slide it down. Now, and then we started trading. So 133 become 36 become a resistance level, right? So here $130. So and then low. So it kind of started lowering down. So at the moment we can see that we broke the level $110. Somewhere here we touched it, kind of we consolidated, and then the broke through, and then again, so a few times. So now we are lower, so that's why we have to be aware of that. So quite possible, because we have this breakthrough loadings levels. So probably within a couple of days we will see if it's going to continue down, or we return back to this level, at least 108, 120. So somewhere here. Okay, this is what we can see, and at the moment, so this is the level where they're offering this money. That's probably the day where they offered. The price jumped straight away here, but it didn't go all the way because it wasn't approved yet. So it's still in the stage of approval, but yes. So it's like two things might happen. So it's approved or not approved. It's not approved, the company is still good, still growing, still fantastic. You make this money when it gets to that level. It might take a couple of years, even during all this political and economical situation, all these troubles, right? But if the Broadcom get this confirmation of the fact that they can buy it, so you will see that next morning you wake up and the price is going to be higher. This is like that. So in this particular case, personally for me, it's very low risk investment. So the only disadvantage that it doesn't have any dividends, right? So, and before you get to that point, so it still can continue to go down. Earnings going to be in November, 22nd of November. So you have plenty of time to play around. So this is a 1 hourly chart. So we can see it one wave, second wave, third wave. And we're just bouncing under that level, which was before $108. So if we break through, we might go sideways before we do that. And then we might see ourselves somewhere in those levels. Okay, 120, 122. Okay, at the moment, although we can see that all indicators on the hourly chart, they bought, right? So quite possible that we might see somewhere return like to $103, $105 level. Can it go lower? Of course can. You know, everything is possible, especially taking into account that earnings season is just starting. Okay. Yeah. So this is the case. So this is my trading strategy. So if I buy roughly 103, 108, if it is long term, so hold it until a level where I sell. I don't think the price will go higher if they know that they're going to sell 142, unless they increase this price. But if they delay this deal, the price is quite likely can go up, especially if the earnings start improving. Right? So possible waiting period 1 to 2 years. Now, roll strategy, if I buy at 103, 108 and hold 110 and 20, it all depends on the strategy. So if it bounces back down, so you can buy it somewhere here and then sell here, like and make about 5% profit. So if it breaks through, so you might buy it here and sell it there. So it's another alternative, right? So it's up, it depends on your strategy, which you're using. It could be 5% profit, it could be 10 or 15% profit on a roll. Depends on the roll and duration of this roll. Now let's have a look at the option trading. Last year, actually, what I've noticed in my slides, it had weekly options. At the moment, I couldn't see weekly options, only monthly options. And one of them is just ending this Friday, and another 1 month after that, so November 18th. And if you look, for example, the price is now 107.82, so it's somewhere between those strikes. So strikes $5, not perfect, not ideal, kind of okay for that price of the share. But then look at the premium. So $3 last trade was $3.40, and it's $105 strike price. So it's like 3% for 1 month. It's kind of not that fantastic, especially taking into consideration the volatility which we have in the market. And also, if you look at bid and ask spread, it's huge, right? So it's very, very big. So most likely, even if you sell a put and then try to buy it back, it would be very difficult to get a profit if the movement is not that much. Same story with the option if you bought shares and sell call. So same story, look at this, $1.6 bid and $3.2 ask. Of course, I took this screenshot when the market was closed. When the market opens, most likely the spread narrows down, but still quite big spread and not that fantastic premium. So if I choose, I'd rather trade the share, so I'd buy it and sell it in a few days' time and make up to 5%, maybe 10% profit. Whereas with that one, I have to hold it for nearly a month and make only 3% profitability. So I prefer just trading game in this particular case. And if we try to buy puts, so I took June 2024, so it's like 1.5 years. So it gives us buying call. So $110, that would be $15 to buy, $10 to sell. Quite a big spread, first of all, and probably also kind of, it's not that expensive because it is 1.5 months, 15% of the price. So it's not that bad, I mean. And you can make money on that. So can you imagine if it goes to $140, so you're going to make what about, it would be about $40, so it could be 200-300% profitability on the option premium if you buy it there. So that could be the case. You can try to make these deals, but again, the spread is pretty big here. So let's look. I might look at another option premium. I don't know, actually. I was planning to take January and June 2023, and instead of that, I took it June 2024, so 1 year later. So probably, guys, you can have a look 1 year before that. Maybe the price is much better there.